Absolutely. So,
Okay.
welcome everybody to our Wednesday Zoom and Learn. Our guest today is Tiffany Cross with Dedicated Credit Repair, who is, correct me if I'm wrong, CEO and founder, correct?
That's right.
That is correct. All right. So we're excited to have you here because a lot of questions pertaining to credit score, the difference in FICOs, the difference in what affects your credit negatively and what can help it, et cetera, comes up, seems like all the time.
Mm-hmm.
So with you doing more of a question and answer type of platform today, hopefully everybody came prepared with questions. But I do have your PowerPoint ready to go as well if you need that.
Okay, so I think I'll just start and then kind of go from there. If we need it, we can go back to it. I've got so much relevant information and I do these so many times a week. I feel like I could do them in my sleep. So first of all, thank you for inviting me. That's so such a privilege and honor to be obviously asked to present our information. I appreciate that. For those of you who don't know who I am, as you mentioned, I'm Tiffany Cross. I am the CEO of Dedicated Credit Repair. This is our 16th year in business. And we are registered with the Department of Justice. And I always start with that because unfortunately, there's a lot of people out there doing credit repair as almost like a side hustle. And in California, if you're a realtor or a lender, you have to be very careful who you refer credit repair clients to because it would be like similar to referring to a non-licensed pool contractor or something. You've got to make sure that the company is vetted, that they're legally allowed to be working with credit repair clients. And not only that, but that your local lenders are working with them because it's so important that your clients have a good working relationship with their credit person and their mortgage company to make certain that we're all working on the same team collectively. So wanted to start by that. I also wanted to mention that credit repair is not the same thing as debt settlement. I think a lot of people refer their credit repair clients or their credit clients to us thinking that we do debt settlement. So I wanted to make a mention of that. Debt settlement would be negotiating credit card debt. And unfortunately, credit repair, which most of your clients, by the way, should be in the process of credit repair because that's more the plastic surgery after the financial hardship. Most people who are in a debt settlement program or in debt, they're really not ready for the home purchase. They're still kind of working through the struggle of getting ready for home ownership. So consider that we as the credit repair company are simply the increase of FICO scores by removing negative things off of credit. And I'll go through how we do that at the end. But we're really, truly the legal experts as to how to increase FICO scores to get buyers qualified to purchase homes. And so that's what we specialize in. So wanted to mention that. I wanted to also kind of go through the fact that just in normal times before COVID, I would tell people 1 in 4 consumers are going to need some level of credit remediation in order to get qualified to buy a home. And that's just always been standard protocol. Credit remediation or credit repair is normally defined as anyone with a 640 and under FICO score. And of course, that's mid FICO scores. Now, because of COVID, people are unemployed. We've got people that are in loan deferment. We've got people who are in forbearance. We've got people who are not necessarily unemployed, but underemployed, meaning their hours changed and they're not working the same amount of time. So we're seeing an increase of basically 50% of the buyers out there that were maybe qualified 90 days ago, but were waiting or sitting on the fence waiting for interest rates to do something funky or whatever. The people that waited are wishing they had it now. A lot of loan programs are requiring increased FICO scores and of course, proof of employment and employment verification processes have changed a little bit. So we're seeing about 50% of the people that are that lenders are running credit on are needing a little bit of fine tuning. So although that may seem a little discouraging, I want to remind you that the FICO score has always and will always move very quickly from the mid 500 range into the high 6s. So although it's going to take a little bit of effort, it's not a huge deal breaker. So don't let some of the naysayers out there or the doom and gloom people that are telling you the sky is falling, convince you that it's accurate, because truly what's happening now, of course, is we're having to work harder. We're having to work smarter. We're having to be privy to some of the changes in the credit laws. We're having to understand how loan deferments and things like that are affecting clients. But I want to remind you that when we started this business back in 2005, we've already had this happen twice. We've already seen a change in the economy. We went through 2008. We went through 2010 when we were dealing with foreclosures and loan modifications. And so we were already able to predict when this happened, how to preemptively help our clients the quickest way. And so far, we've seen minimal damage from some of the things that have happened in the economy. So for those of you who know someone that was in a loan mortgage deferment that was wondering, hey, what the heck is this going to do to my credit? So far, so good. We're not seeing very many 30-day lates placed on the credit reports like we expected could potentially happen. The CARES Act was really good about protecting consumers from seeing those 30-day lates hit their credit report from being in a mortgage forbearance. But keep in mind, some of the clients are still in the mortgage forbearance. So truth will be told here soon when the mortgage forbearance period starts to end for many people. So we're keeping a close eye on that. Now, also we're seeing that with student loans. Student loans are hitting the reports like crazy. A lot of people didn't even ask to go into loan deferment, and they were all of a sudden put into a deferment situation. We're working very, very closely with mortgage gurus, staying completely in the know as far as how mortgage underwriting is handling certain words like mortgage deferred or forbearance. We're even seeing the words natural disaster placed on credit reports, which we found some workarounds as to how to get those things removed from credit reports to make the underwriting go smoothly for your buyers. So bottom line is, you get what you pay for, in the sense that when you work with a professional company that's been there, done that, kind of understands, that's really what we're striving to do, is help your buyers overcome some of those things. Now, in terms of how long does credit repair take, we are not miracle workers. And unfortunately, there are so many credit repair companies out there that will literally take your credit card. If you have a heartbeat and a credit card number, they'll take your business. And unfortunately, that's pretty standard for the industry. What is super important that our referral partners know is that we do free consultations with every single client. We touch and feel the credit report. We go through either a Zoom consultation or an over-the-phone consultation. Normally, we do them in office, but of course, with COVID-19, we're not seeing clients in person right now. But during that consultation, a client's getting a 30 to 45-minute review and an analysis and an estimation as far as how long it's going to take them to be purchase ready. To give you an idea, a miracle for us is if you have a 500 FICO and you need a 640, 680, it's going to take anywhere from 3 to 6 months to do that. So this is not somebody that you have in escrow that was not pre-qualified, or the lender didn't do a great job of pre-qualifying the client. This is not somebody that you can't do it simultaneously to putting in offers. So credit repair first, get them qualified, then move them into the mortgage seamlessly with a little red bow around their neck. So if you have friends who have gone through divorce, or you have individuals that are thinking about purchasing in the next 3 to 6 months, you'd want to send them right away to get started, because credit repair is happening super fast right now. We're seeing an increased amount of results. Many of our clients are seeing bankruptcies removed. They're seeing collections, charge-offs, 30-day lates removed at a much faster, more rapid speed. But the credit bureaus, by law, are supposed to be providing credit reports within 30 to 45 days. And what we're seeing is they're not. They're deleting and they're verifying the information in a timely manner to keep them compliant. But some of our clients aren't getting actual credit reports in the mail for 90 days, even slightly longer. So all the more reason for clients to be coming proactively to address their credit concerns and issues. And by the way, there is not a case that we can't help. It's just sometimes we're not the first step in that process. I want to talk a little bit about some of the frequently asked questions that we're getting, and then I'll open it up to questions, but there's enough current content out there that I wanted to just start with. First and foremost, clients are saying, how come there's so many different versions of a credit score? Where can I go? I don't know if I'm in forbearance. I want to know if they put me in mortgage deferment. What can I do? So I want to start by telling you, that Credit Karma, Experian, all of those websites are what we call FICO scores. Okay, they're not FICO scores. So when you go to Credit Karma, you get TransUnion and Equifax for free. When you go to Experian, you get Experian for free. Great resources for free content. In other words, the content on your credit report is accurate. The score is not. So remember that those scores that you're seeing on all of the free websites are what we call consumer report scores, otherwise known as Vantage scores. So you're going to see that a mortgage FICO score is actually 30 to 40 points lower than what consumers are seeing on those FICO reports. So if you want an accurate report with true FICO scores, you're going to want to go to myfico.com, and that's myfico.com, and that's going to give you your auto FICO, your mortgage FICO, your credit card FICO, your bank card FICO. There's a lot of different versions of the FICO scoring system, and so you're going to get the whole thing. The downside is you get what you pay for, so you're going to pay about $35 each time you pull your report. But if you've gone into loan forbearance, or you've adjusted any of your bills, you've called your auto company and you've asked to be on a deferment situation, you need to be monitoring your credit now more than ever. It is really important, because if there's any violation in the terms of that forbearance, now's you got to strike while the iron's hot. You've got the CFPB that's willing to make humongous amounts of corrections on credit profiles. You've got a lot of advocacy groups that are in your corner to make certain that you're not penalized during this time. So now's the time to know. You never want to be reactive when it comes to credit. So myfico.com, hands down the way to go. I wanted to mention, we're getting a lot of questions about people saying, thank you, Jesus, I am not having to cut spending. In fact, quite honestly, I've got my taxes back and I'm ready to pay down debt. What should I do? Should I pay off my credit cards? Now, pre-COVID, we would tell people absolutely. The 30% of your FICO score requires that you keep your utilization of credit intact, meaning in an optimal situation, a consumer would carry 3 to 5 credit cards, never exceeding more than 25 to 35% usage on every single card, okay? What's happening though, is because of the credit risk, because of the amount of people defaulting on loans, a lot of companies, Capital One is notorious for this right now, are decreasing credit limits on clients that have credit challenges. So for example, let's say you owe $1,000 on a Capital One credit card and you have had credit challenges or are having credit challenges. If you were to pay that down to $500, which would be half, you may very well see that credit card's limit gets dropped to $500. So now it looks maxed out when really you just paid half of it down. So right now, while this COVID thing is happening and our credit challenged clients are saying, what can I do? We're telling clients to make a third more than at a time over the minimum payment, and do that several months. And then if you want to pay it down or nearly off, do it that way rather than show an aggressive payoff strategy. So again, this is all very specific to what's happening now. And always, we've got to stay on top of what the trends are, but that is a very consistent trend that we're seeing, that lenders are dropping credit limits and or closing accounts on individuals who are paying aggressively some of their debt off. So pay it on time, don't miss payments, certainly don't defer something that you don't need to defer. A lot of these programs are going to be placing the 4th month. You're going to be required in a lot of cases to pay all 3 months of the deferment. And believe it or not, I do have some clients that are not paying their mortgage, or they're not paying their autos, or they're not paying their boat payments, but instead they went out and bought something pretty, recreational vehicle or something. When it comes time, and many of these lenders are saying to the consumer, you're going to have to prove the forbearance in 90 days. In other words, you're going to have to prove that you didn't buy anything new, that you didn't, that you truly needed the forbearance. So keep that in mind when you're talking to clients. Absolutely. The other thing I wanted to mention is that if you have open collection accounts, or if you have clients with open collection accounts, now is the time to negotiate settlements on collection accounts on credit reports. Pre-COVID, you were lucky to get anywhere from 25 to 50 cents on the dollar settlement. 50 cents on the dollar settlement, by the way, was pretty standard. We're seeing a lot of collection companies going as low as 25% settlements on some of these collection accounts, especially if the collection account is over 4 years old. 4 years, and this is the statute of limitations in California for debt. And what that means is they can try to collect for much longer than 4 years, but they can't sue you in the form of a judgment past 4 years in 1 day. So really any collection debt that's 4 years old, now's the time to negotiate small settlements on, get them hammered out. As soon as they've been settled, refer that client over to me, because the deletion of a paid collection is what's going to bring that score up, not the payment of a collection. So we're seeing clients are absolutely loving the fact that they're able to call, negotiate settlements on their collections, and just get smoking deals. So our phones are ringing off the hook with people calling saying, I can't believe I was able to get my repossession of my car negotiated down to $800. By the way, one of the examples was the client had a $12,000 open collection because of a voluntary repo. And she was able to get anywhere from $800 to $1,200. $1,200 being, if she paid $1,200, they would delete it from her report. So now's the time to be focusing on that as well. I'll open it up to questions. I can go on and on. I have a PowerPoint that I can go over, but those things are pretty basic FAQs for credit in general. And I feel like right now we're getting so many COVID related credit questions. I'd like to kind of open it up to questions and see what you have for me.
All right, so while people are trying to unmute themselves or what have you, I'll ask the first question then. You brought up that some credit card companies are decreasing credit limits. Now, is that legal for them to do without warning? Like they can just choose, say, we're decreasing it without giving you any notice whatsoever?
Absolutely. Absolutely. And they'll
That's
define
insane.
it as they'll define it as you are a high credit risk. And to be fair to the companies, for the most part, the people that are being decreased limits are high credit risk individuals. So you know, they absolutely have the right, and as part of your terms of service with a existing creditor, that they do reserve the right to do so. Now, on the flip side of that, I should probably mention, if you are not a high credit risk, and one of the biggest concerns you have is, you know what, you may not have missed payments, but you're thinking, you know what, but I do have those 2 cards that I use for business that are over 35% usage. Maybe one's at 50% or one's at 75%. What can I do? Well, if you have good credit, meaning 700, 740 on up, call the companies that you work with and ask for increases in credit limits. Because by simply increasing your credit card limit, you're already decreasing your utilization ratio, which is the 30% section of your score. So now's the time to do that if you don't have any issues at all.
Gotcha. All right. Well, let's open it up for some questions.
I have a question. So I actually heard from a lender and from someone else that if you pay off something in collections, your credit goes down first.
It does. It does. And the reason why that happens is because the date of last activity refreshes to 2020. And sometimes that payment is more harmful initially. But the reality is that if you don't settle it, it'll sell over and over and over to other collection companies who will consistently report it all over again with a new balance, reactivate the date of last activity. So it's always best to settle collections. But remember that once you've settled the collection, hiring us to get it deleted is the part that brings the score up. And that way, when we dispute it for deletion, it's a permanent deletion.
And in some cases, you can negotiate that in the settlement as well. As the settlement is, let's negotiate a rate down to a reduced rate, and by the way, have it deleted.
You're going to find that the only types of companies that are willing to do that right now would be medical collections, which there's a ton of you and your clients that have those. Medical collections, 95% of the time will agree to deletions of collection settlements. Most major banks will not. And the reason for that is that the credit bureaus came out about 1.5 years ago and stated very clearly that if you are a company and you're agreeing to what they call a pay for deletion, they will no longer allow you to report to them. So most collection companies said, oh boy, we got to stop offering the pay for deletion as part of our settlement process. However, medical collection companies seem to be the exception to that rule, and they do delete with payment.
So if someone does agree to delete it, what proof would the client need to know that it's actually been deleted?
So most of the time, and this is different now than it used to even be 5 years ago, the regulation of collection companies is so severe that they have to record the conversations. They also have to let you know this is an attempt to collect a debt, anything, you know, that kind of thing. They're pretty darn good at doing the deletion. If they agree to do it, there's very few companies that are going to put it in writing prior to you paying. Those days are pretty much yesterday's news. So at this point, for the most part, other than documenting it, which I do, you know, tell my clients name, contact number, phone number, date who you talk to, do all of those things and document it. What's more important than them actually following through with the deletion is you keeping track of your payment. Because I can't tell you how many times consumers have paid a collection, the collection company agreed to delete, and they did. And then 2 years later, the debt was sold after it had already been paid. Now an old debt you've already paid has now reappeared on your credit report, and you have no proof that you paid it, or you can't remember what month. You'd have to go through your credit card statements and just kind of guess to see what time of year it was. So I'm always telling my clients, once you make the payment, email yourself a copy of the date and the receipt of payment, and or a snapshot picture of your bank statement, and say paid collection AT&T confirmation, and then start a folder in your email so that you can always reference it. I would say, you know, 2 out of 10 times that will happen.
Yeah, that's really good advice. Thank you.
Welcome.
All right. Anybody else?
Yeah, I just wanted to say, this is Tracy. I just wanted to say that I use you guys, Dedicated Credit Repair, for all of my clients, and you guys have done a wonderful job with them. And I've also used you for my personal use. So I just wanted to say thank you for that.
Aw, thank you. That makes my heart happy. You know, we're a family-owned business, and it does make we take every single file very seriously, but we're not a franchise. So when I have, you know, local support, it means the world to us. So thank you.
Right here?
And okay, any other questions real quick?
I have a question.
Go ahead.
Yeah, I have one too.
How much do you charge the clients, and how many points have you seen them been bumped up in the shortest period of time?
That's a great question. So because we're registered with the Department of Justice, we have very strict guidelines on how we can bill clients. So our clients pay a one-time fee up front for their enrollment, which is $199. We keep it extremely affordable. If they're military or teachers or first responders, then that drops to $179. So it's a super affordable enrollment, and that covers our costs to build the credit campaign. But the service is billed by law, month to month in arrears. Essentially, the clients are not contractually allowed to be obligated to any length of time in the program. They simply stop when they stop getting deletions, or they meet their minimum FICO requirement. So the average length of time is 3 to 6 months. 6 months, I like to say 6 months, because most likely you're going to land right around the 4 or 5 month program. It's not uncommon for our clients to get 100-point increases in that period of time. We have clients that get 30-point increases. We've got clients that get 300-point increases. So it's really, you know, to ask that question is how many points. There are so many factors: how many open revolving lines of credit they have, how many collection accounts they have, did they settle their collections, how many, do they have a bankruptcy, was there a foreclosure? You know, that to answer that is like, you know, taking a fingerprint from someone and saying it's going to match someone else's. But the reality is that there is not one.
I have another question. My dad's always used Adam Owens, he's a lender, to do like rapid rescores on clients. And you know, sometimes people only have like $7,000 worth of debt, but they have 10 grand so they can pay off their debt, and they bumped them up fast enough to get qualified.
Yeah.
I mean, it's just tough to ask Adam to do it because he's a lender. He's not a credit repair agency.
Well,
so I mean, it'd be nice to.
Unfortunately, lenders are required to do that. So credit repair companies are not legally allowed to pull credit, nor can they do rapid rescores. So that
you can't rapid rescore anybody.
It's illegal. Yeah, it's illegal for a credit repair company to run credit on anyone or rescore.
What if you had an MLS license?
Well, if I had an MLS license, I'd be doing real estate, which would be a conflict of interest.
What if you have what's required to do a rapid rescore by law?
I'm sorry?
What's required by law to do a rapid rescore?
You have to be a mortgage lender. And so what's basically happening with a rapid rescore is you're asking the company in which you're pulling credit to rescore in less than 30 days without allowing the change in the credit profile to take full 30 days, because paying off credit debt will automatically reflect on your report within 30 days. So the rapid rescore is only done to save an escrow from burning up in a 15-day period of time.
How much is your monthly fee?
$79 a month.
So it's $199, $179 if you're military, and then it's $79 a month.
That's correct.
So your initiation's $200, then you're $80 a month.
That's correct. So it's very rare that somebody would spend even $600 in our program on average. That would be excessive.
So can you put me in detail what you provide for the client?
Yeah, absolutely. So we essentially take every single credit report that we've gone through a free consultation with. We sit down and interview the client. We go through their debt utilization ratios. If they don't have significant amounts of credit, then we help them establish 3 or 4 revolving lines of credit. We also help them organize their collections to determine which ones they need to settle in what order. We tell them how much to offer. We provide an Excel spreadsheet for them to organize their collection settlements and give them coaching as far as how that's to go. Then we start disputing the derogatory information with all 3 credit bureaus that's unverifiable or inaccurate. 65% of everything on a credit report is going to be unverifiable information within 30 to 45 days. So we do all the work on behalf of our clients. And their responsibility at that point is to send in the updated credit reports that they get in the mail. And when we receive them, we process them. We review the results with the clients every single month. They get 24/7 tracking capabilities through our website to see real-time updates with TransUnion, Experian, and Equifax, so they never are paying for something that they don't have complete transparency on how they're doing in the program. And then we simply consistently redispute using different strategies. And again, the clients are free to cancel whenever they stop getting deletions or meet their minimum FICO requirements.
And Tiffany, you guys also keep the real estate agent and or lender that referred that client to you in the loop via a back portal of your website as well. Is that correct?
That is correct. Absolutely. And that's what the benefit of our service is, that you're never not alert to your clients and how they're performing in the program. There are some clients that fall off. I mean, let's be honest, a lot of the clients that have credit issues are not necessarily the most proactive clients in the world. And so I will tell you, unfortunately, the number is 1/3 of the people that get sent to us, their credit card will decline every month in our program. And it'll take them 60 days to restart their program again. And so in those cases, obviously, the speed of our program is determined by the fact that the client's paying us or not paying us. And or frankly, if they get a new collection account on their credit while they're in our program, or they miss a payment on something while they're in our program. So there's a lot of things that can kind of deter clients. But the ones that follow the program how it's supposed to be followed are always in and out of the program super fast.
Perfect.
Well, it sounds great. I think I'm going to send all my clients to her, aren't you, Tommy? I mean, if it sounds good. It sounds like a good idea, doesn't it? I mean, if I'm going to be calling 100 people a day, and I had in auto dealers, I had a bunch of people come in. When I sold 100 cars during coronavirus, I had probably 20% of people that had too low FICO, where their interest rate was 19% on an auto loan. So they were buying a $30,000 car, and they were paying massive amounts of interest. And there's so many people I come into contact with, and I know so many people that work at car dealers that have the same problem, and we can't really do anything, because if you pencil somebody and you give them a Foursquare and the payments, for a $65,000 car when they're trying to finance a $40,000 car because they're not tier 1 plus credit, because in the auto industry we take the 2 highest scores, so maybe whichever one it is, you take the 2 highest scores, not the 2 lowest scores as of mortgages, right? So we work the best we can with people, but we know that if they do get an auto loan and they pay it, they can refinance once their credit comes back up, and then it's simple interest. They don't pay the remaining interest, which is nice. So it's kind of like a home refi, right? But at the same time, it's very hard to get these people to do it. And I used to give this book called Credit is King to people. So if they had shitty credit, no offense, excuse my language, and they were just really crap at paying bills, even if they made like $50,000, $75,000, $125,000. I had someone with $125,000 income and had a 530 FICO.
Yeah.
Do you see what I'm saying? So it's just some people don't care.
Right. So on that note, to be completely transparent with you, 95% of our business comes from lenders and realtors because our programs were really designed for the FHA VA borrower. Now, my mortgage auto dealerships, I work with a ton of them. By the way, nationwide, we work with all states except for Oregon, Texas, and Georgia by law. Those three pretty much regulated credit repair out of the industry. So we work with most clients in almost all the states. So banks use us all across the nation. My auto referrals, here's what happens with them, and it's full transparency. When somebody gets told, sorry, no can do on a car loan, they'll get upset for about 16 minutes and they'll move on. Same with solar. For whatever reason, that person will call, kind of kick tires around, talking a little bit about it. But when you come to the home purchase, for whatever reason, these clients are out shopping for homes, knowing they have a 520 FICO. And then when they get told you can't buy a house, they suddenly care and they want to fix it overnight. It's the strangest thing. So it's really hard to find a proactive auto buyer. So that being said,
I don't know if you've ever dealt with a large dealer. So I worked with Toyota Huntington Beach, and I still work with them. It's part of the Dave Wilson Automotive Group. There's 9 dealerships. We gross $1 million profit a month. We sell hundreds of cars, 500 cars, 600 cars a month. That's probably a 25% close ratio between walk-ins from internet and walk-ins. Well, now due to coronavirus.
Sure.
Everything's just internet leads, really, because people don't drive down Harbor and say, oh, I want to go buy a 4Runner. And the interesting thing is that Toyota is such an accessible product because it's reliable, and people know that if they do get a shitty payment, that it's going to last them 10 years. So I didn't have a problem selling people with bad credit a car because I know it's going to improve the credit. But what I struggle with is I never had anybody like yourself or a company like yourself I could refer somebody to. And for $200 plus $80 a month, and you fix the credit, they do it for 3, 4, 5 months. What's $600? $600 is one auto payment for, an affordable car. And
I couldn't agree with you more. I wish everybody agreed with you.
I would love to refer people to you because I don't have the time. What am I going to do? Say, oh, hey, John Doe, hey, Jane, let's do a Zoom tonight at 8 and let's go through all your problems and see how we can fix your life. Fuck that. Excuse my language. I do not have time for that. And right, I'm not good at that.
James, let's stay on task here, brother.
Okay, I gotta go. I'm going to Beverly Hills right now. I'm looking at a flip.
She can definitely help all industries fix their credit, but she's being transparent with you that most people that are trying to fix credit to buy a car are not going to be serious about it in most cases. If you have clients that are, great, she's there to help.
Perfect.
I'm in.
All right, see you guys. Thank you. I'll get your number off Tommy and everything. I never even met you, so pleasure meeting you, and
nice
have a great day. Thank you.
Thank you.
Bye.
All right, Antoine. I don't know if Antoine's still on. I think he had to go in to show up property, but he had a couple questions, but I don't think he's there.
I wanted to mention, so Antoine and Antoine invited me and a group of individuals to Okinawa, and I presented with him internationally to military personnel our FICO Sense to a White Picket Fence curriculum, and really helped at least a portion of it. So if you work with military, if you work with first responders, nurses, teachers, please understand that our heart, especially right now more than ever, is to really, really serve. So in the event that you wanted to do a Zoom, first, my FICO kind of thing where we could do this with your buyers, happy to do it, happy hour style or something similar to this, because I know, normally you see my ugly face out your offices dropping off goodies, and right now it's just all about Zoom. So happy to do more of these with you.
And for those first responders, military, teachers, etc., you said it was a discount price of $179 initial.
That's correct. And instead of I don't know if I was able to mention this, but instead of $79 a month, it's $59 a month. So,
gotcha.
They're really getting a significant savings, and they're getting a great, great program.
Yep. I'll just throw a plug out there because I work with tons of different agents, right, and lenders, et cetera. A lot of agents that I work with have sent clients to you, and I would say on average, unless it was really bad, like 500 minus. The average from what I've gathered back and heard has been about that 4-month mark as the average. And let's be honest, most of these agents that are generating online leads and stuff like that, and they come across those clients with credit issues, it's not usually a 480 to 520 credit. It's usually around that 580 to 620 area in which they're falling. And a lot of the stuff that is on there is not necessarily because they have current 30-day lates. It's past stuff and they've been clean for a while, etc. Yeah. And that would be the perfect client, right?
Yeah. So I love that you just asked that because it triggered another thing. So, you know, my realtor partners, they're out, they're farming and they should be, and they're doing all the right things. I get so many great marketing pieces in my mailbox from realtors. You know, I'm like, gosh, this is really impressive. You know, and the goal is that you have what, a 1% return, a 3% return, whatever that looks like. If you find a target market, first-time home buyer, the VA, you know, gosh, recent divorcees. I mean, whoever that looks like, where you have a way to bankruptcies that were 3 years ago, maybe find the title company and see if they'll do a search on, you know, bankruptcy or individuals that are 4 years old, or maybe a divorcee from 4 years ago. Start marketing all of the things that you've already been doing, but add to it a credit component. Because when you add credit into any social media pieces, you're going to be attracting literally, we used to be 1 in 4. Now it's 50% of the people seeing it are going to go, oh my gosh, I didn't know that. Or I didn't know that was, you know, so target uniquely the people that are desperate for this. So the old school credit repair was people you didn't want to work with. They just, oh, I don't want to work with people with credit challenges. The new school of thought is this is real people with real life events, business owners, you know, recent divorcees, people that lost their business during COVID. You know, that's going to be kind of a thing, unfortunately. So sorry about that. So anyhow, just, you know, rethinking about changing the paradigm a little bit and adding, not necessarily in lieu of what you're doing now, but add to it a credit component. By the way, if you go to Dedicated Credit Repair's Facebook page, we're really good about posting almost daily credit tips. Please share them. You know, put your own information on there. Share, even Instagram. Use our content. See who you can find. Say, hey, is this you? Do you have a car payment that's behind? Or the next post, do you know someone who's recently gone through divorce who has credit challenges? Use the content. You don't have to recreate it, and see what you get from it.
So I'll bring that back up because I think most agents can think outside the box. Of course, the client has to have skin in the game. They have to get involved in the program, pay it, get the things corrected to a point where they're able to purchase. But I think there's ways of thinking outside the box to somehow credit reimbursement of some sort, the cost factor to encourage them to do that. The second piece would be God, something that just triggered in my head when you were talking, and now I'm like, draw a blank. Sometimes it's tough for somebody to get over the hurdle, right, of opening up and saying, yeah, I screwed up. I had some bad times. I didn't make some payments. I had a bankruptcy. I had this. I had a repossession, whatever it is, right? Yeah. Get to the core root of what caused and when it caused the FICO to drop significantly. And let's be honest, FICOs drop 10 times faster than they come back, right? Yes. I mean, you have one 30-day late and you drop 70 points to 100 points, and then all of a sudden it takes you 3 years to gain that back. Mm-hmm. Kind of like it takes you 1 weekend to gain 5 pounds, and it takes you 6 months to get it off. Right. Exactly. But I think it's a notion of talking with clients and breaking the ice to be like, listen, it could take you between $300 and $800 on average to correct this in the next 6 months. Ultimately, what does that mean for you and your family, though? Right? Mm-hmm. If you're in a renting situation or something like that, where your rent's constantly going up and up and up, and you can put your family in a better situation, is $600 on average worth it? In most cases, most people would say yes. Mm-hmm. I think it's a notion of the agents coaching and training their clients to get to a point where the client, when they come to you, understands that, you know, if it's a right fit and they meet with you for that consultation, that, you know, you need to dedicate yourself as well, right?
Yeah.
And
Yeah.
stick to
And, you
it
know,
and get it done.
I think the reality is the clients, like you said, are vulnerable. They're a little embarrassed or whatnot. And first couple things is it's super confidential. It's completely confidential, number one. And number two, it's a free consult. We take about half of the people we talk to during that consultation, when they're skeptical, which they should be. Let's be honest. I mean, this industry, all industries, I think nowadays it's just kind of weird if you're not a little skeptical of a lot of things. During that 30 to 40 minute consultation, there's so much education and trust and rapport being built that we don't have clients that don't enroll if they can. I mean, they just do. They feel loved. They feel heard. They feel understood. They feel like there's a plan in place. And the ones that don't enroll today, without fail, are going to come back because they felt listened to and they were given a roadmap. So you may not be, I may not be step one. I might be step three. But the important thing is that they have accurate information. Temecula talk, Murrieta talk, all these talks. I just got tagged in it today. God, you know, these people are so sweet to try to help people, but the information that floods the responses is so inaccurate. And it's unfortunate because people don't do their own due diligence. And that's what's so wonderful about these credit consultations. So, and then to your point about the, what I call gift certificates. So a lot of my real estate partners are doing just that. They're saying, listen, if you list with me and you close with me, you go through the process, you invest in you first. I'll pay up to 6 months of credit repair, because let's face it, if it's more than 6 months, something happened wrong. Something went sideways. They either got a new 30-day, you know, whatever that looks like. I will reimburse it to you at the close of escrow. And you know, instead of doing a home, you know, whatever, a home inspection, whatever that is, adding this to it. And so they'll do a prepaid.
Right, or they give a credit of their commission towards closing cost or whatever's legal within CAR.
Correct. Yep, we get that a lot.
So that brought the reminder back to my head what I was going to ask. You guys had made it easy for real estate agents to register on your site, to be able to have a portal to refer clients in as well. Correct. Is that correct?
Yes.
I'm just making sure I have it all accurate. Maybe you can talk to people about that as well.
So on our website, which if you go to, we were talking about going to that right now. If you want to, that'd be great. But if you go to my website, which is dcrusa.com.
I have your flyer right here. Look at that.
Yay. I appreciate that.
In my home office. What do you know, right?
I love it. I love it. Yeah, if you go to dcrusa.com and just put on there, you want to become a referral partner, and just put your information, we will send you a secure link. We'll enter you in as an affiliate. And then that way you just refer your clients electronically. And by the way, the best way to refer a client is not to give my card. I mean, I'm grateful if you try that, but it's not going to do anything. Their clients are not going to call. But if you take the steps to say, hey, listen, if you're at an open house, which I don't know if they still do those now. I don't know if we're doing those nowadays. No, probably not. No. Hey, listen, I appreciate you taking the time. Do you mind if I have our preferred credit company give you a call for a free consultation? Most will say, absolutely, that's great. Take the action step out of their hands and enter the referral. All it is, their first, last name, email, and phone number. That's literally all I need. And then right here on my site, when you go there, it'll say, I believe it says partners. If you go to the partner tab, sorry, I'm super blind right now.
Right here, partner tab. Yeah.
And then if you scroll down, become a partner. Just follow that. It's right there where it says become a partner, and then refer a client.
So complete the form below, become a partner right here.
Yep. And you just send us your information, and that automatically sets you up to have your own referral portal in our back office. And by the way, the beautiful thing about that, and the reason why that's important, is that from that moment on, every client you send it to us electronically by clicking the refer a client. Yep. Once you've done that client's linked to you in our back office. So there's no room for error. No room for human error, that is. And you'd be able to have 24/7 email updates, all the electronic updates that go to the client, you're going to get copies of. So that's what's so important. And that, by the way, when you get an email that says, congratulations, you've had 12 derogatory accounts removed this month. My great referral partner agents will actually call and be like, hey, congratulations, client. I noticed you're doing well in the program at DCR. Would you like some information on the Balloon and Wine Festival in Temecula, blah, 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 blah. Just keeping a warm hand on them once a month is super valuable.
Yeah. So I just wanted to touch on that real quick because you guys have made it real easy. And not only that, then it keeps the agent up to speed of how they're kind of doing in the program, et cetera, et cetera. Because let's be honest, sometimes that's a hard conversation for an agent to have. You refer them out, they're like, hey, we need to work on your credit. Here, work on your credit. And then what? Call them every month like, hey, how's it going with your credit? That's the worst conversation you could possibly ever want to do and pick up the phone and have with a client. Because if you just left it in their lap to do on their own and they felt like they're on a deserted island, 90% plus will not do it, right? So you're constantly asking them the same question when nothing has changed. And it just makes them feel less and less, right? So by having that tracking portal of being able to keep up to speed with how things are going and things like that, you'll have a good idea that things are moving in the right direction. And then you can have positive conversations when you contact them versus how's the credit, right?
Yeah, yeah. And that's also a good point. The system now allows for a lender and a realtor to have tracking capabilities. So depending on what mortgage lender you're working with, frankly, I'd like to know right away because I like to, have what I call a 90-day, 3 to 4 month progress report conversation with the client. But also we need to be starting to talk to the lender. Say, okay, let's run some what if simulations based on the fact that they've had these 9 things removed. The gentleman that was on earlier that said, can you rapid rescore? It's not really done like that in the mortgage industry. It's super expensive, and ordinarily a mortgage lender is going to want to see that those things reflect within 30 days rather than constantly rapid rescoring each trade line. But that being said, they can run some what if simulations going, boom, we're there. You got those 5 deletions and all we needed was this to be paid down. Let's run credit. So it's nice for you to be, the cheerleader and let the lender and the credit person kind of be the ones in the trenches.
Absolutely. All right. Any other questions for Tiffany? Go ahead.
Tommy, can you hear me?
Yes, go ahead, Alicia.
Lisa. Hey, I have a question. Many times I'll have people say that they're with Lexington Law, and most of the time they're not really very happy or they're frustrated. They don't know what's going on with where they're at. So is it a hard transition to refer them to you if they're working with them?
No. So this is what my favorite referral is, because Lexington Law, first of all, they're the example of if you have a credit card and a heartbeat, you sign them up, right?
That's what I thought.
So they're putting people in programs. If they have $20,000 worth of open collections and they're all brand new, like last month, they're not coming off. So an ethical credit repair company would tell that client, hey, listen, you're not ready for credit repair. Credit repair is the plastic surgery after these 4 steps. Give them a roadmap. Then when they do credit repair, they're going, wow, that was really great. That worked. Now, the other thing is, let's assume all factors were equal and that the clients weren't brand new collections and they were older things, as we talked about before, and they were referred to me and they were referred to Lexington Law. The difference is Lexington Law will dispute 2 or 3 accounts with TransUnion 1 month, 2 or 3 accounts the following month, with the idea of keeping the client in the program as long as possible. So they're marketing direct to consumer, and they make their revenue based on the length of time clients are in the program. We market direct to you, the lenders and realtors. So if my program took eons, with all due respect to real estate agents and lenders, you have a short attention span for business, right? We want to make certain that when you're referring, you're getting transactions closed. So we actually rely on volumes of clients rather than keeping the same people in the program a long time.
I get it. That's interesting. Okay, great.
Yep.
Go.
Right. Great question.
So does a 30-day late, or 30-day or 60-day late, does it really knock your credit down 100 points?
60 to 80 points is the average. The higher your score, the more it dropped it. So if you were in the 800s, it's a really good chance you're in the low 7s. It's an unfair, what we call teardrop format in the scoring system. If you're already in the 500s, you're not going to go down 100 points. So they penalize people more at the top of the
Yeah,
stratosphere.
but you're still likely to go down 50, 60 points.
Easily.
Yeah. Yeah, being up to date is the most important thing, because it's so easy to miss a payment, and there's no leeway. I mean, the credit companies are in the business of making money, and they're going to make money by you having a bad credit score, not having a real great credit score. The better your credit score, the better percentages you get, right? They want you to have a mediocre credit score because it benefits them. So
Yeah,
they're
exactly.
going to report you the first day you're a day over 30 days. Why? Because it benefits them, and it doesn't
So
benefit
how does
you.
the client go about getting rid of it? I mean, if they've got a 30 or 60 day late, is that something that can be gotten rid of?
Yes, that's what we're here for. Now, the older it is, the easier it is to get removed. So if the client was late last month, there's no percentage of chance of it coming off.
No.
If they were late within the last 6 months, it has a 15% chance of removal. And so that's what the credit consultation is for. We'll go say, okay, this 30-day late's 4 years old, is a 65% chance of removal. This collection is a medical collection, it's 5 years old, it has an 80% chance. So what our company does is we go through every single line item with a consumer and let them know the likelihood of each thing coming off. Now, keep in mind, you're not going to leave my program with an 850 FICO. It's not going to happen. To me, I've 16 years now. It's never happened. What does happen is you go from a 5-ish to a 680 in 6 months. So you're buying a house. The rest of that healing process on a FICO score requires length of history, diversification of credit, low amount of inquiries, and then of course the utilization of credit. So those factors are outside of a credit repair company's control.
All right.
Also on that note, really a good referral isn't really a client coming to me and saying, I have one 30-day late. It's a 50-50 on that. You know, what's a better referral is someone that says, I got a whole mess here. I want to buy a house. And then we say, perfect, let's do it. And then we can help that happen. In other words, I don't have to be 100% successful to make that happen. Whereas a 30-day late, we'd have to be 100% successful to make it happen. If that makes sense.
Absolutely. All right. Well, I am very glad that you came on. Actually, I'm glad we did more of a question and answer instead of just a PowerPoint, because I think it was more impactful, and it probably answered a lot of questions that others will, see in the recording of the video or what have you.
I have a question.
Last thing, I have these. If you want them for your office, I have these in English and Spanish. They go through details of the program. You just held yours up. Talks about the differences and kind of what we do. If we ever return back to normal and kids are back in school and life goes back to life, keep these listing appointment. You never know if an open house, 1 in 4 people will need it. So, but staple your business card to them, because without fail, they'll call me and say that realtor, that pretty realtor at Remax or that pretty Tarbell, and there's going to be no way to know who it was that sent them. So if you staple your card to these are huge. Someone had a question. Sorry, I didn't mean to talk over you.
No, that's okay. I was just curious. This is Brenda Martinez with Better Homes and Gardens Real Estate. Hi. So I wanted to just ask more of like, how do you go about changing, helping clients change their FICO score? Is there like the process in removing such claims on their credit report? Is it letters that you're doing? What exactly are you doing in your program?
Yeah, so we're taking the credit report line item by line item. We're looking at their open credit cards. We're looking at if they have enough. If not, we're establishing credit for them. We're coaching them on their utilization ratios, on which cards to pay down in what order, which is, by the way, 30% of their healing process. And then we're taking all of the things that are on their credit that's derogatory, and we're creating an aggressive and tenacious letter writing campaign to dispute direct with the creditor sometimes, if it's necessary. A lot of times it's only going around circumventing the creditor out of the process and disputing direct with the credit bureaus. So we use the FCRA, the Fair Debt Collections Practices Act, now the CARES Act, the debt verification laws. So it's kind of the secret sauce of our program, but essentially each thing has about a 10 to 15 different stage dispute campaign that we do. We don't go online and Credit Karma and click dispute, dispute, dispute. That's like 1980s style and very temporary with various things. So everything we do is a permanent deletion, and we go through and we dispute very tenaciously. And sometimes we even help clients file claims with, the Consumer Protection Bureau, the Consumer Financial Protection Bureau. Thank you, CFPB. Sometimes we help them and we just say, okay, well, if you're not legally responsible for this, and it's unethical that you have this on your credit report and it's not something that's being removed, and it wasn't identity theft, then we're coaching clients on it as to how to file lawsuits against creditors. So there's a lot of different ways that we do it. There's not a one size fits all thing. We don't use the same letter for everybody, which, you know, again, if it were that simple, we wouldn't be in business 16 years later, but it's a multifaceted thing. And you know, what I might do for you might be super opposite for someone else. So it's very specific to each person. And that's why, again, people love us. If you go on our Yelp reviews, and you're going to see that we individualize our campaigns, and that's why we charge an enrollment fee, because it's not just a standard list of letters that we click, 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 and off they go.
And the key there is,
thank you.
You coach them on paying down, not closing.
Exactly.
Don't
exactly. And right now,
down.
It's not just about that. I got to tell you, 40% of the clients that come to us have one credit card.
Yeah.
You know,
they just don't have established credit.
They have missing credit links, and we help them immediately fill that void. We've got relationships with banks. We've got relationship with collection companies. So there's times where we'll, you know, help a client by simply saying, this is RGM Collections. Here's the contact person at that company. It's time to negotiate a settlement. Call and offer this amount.
Yeah.
I forgot to ask a question when you were talking about pricing. How much is it, or is it always going to be individual?
It's the standard $79 a month. If you have 2 things or 40 things on your credit, you're going to pay $79 a month.
So it was $199 initial, $79 a month, unless you were military, first responder, teacher. Then it was $179, $59 a month.
Correct.
No, but my question is that like a married couple, or would they have to pay each?
Yes. So you're considered individuals to the credit bureaus with 2 social security numbers. So it's $79 per person. However, if you enroll at the same time, the spouse will only pay $100. But that's if it's at the same time. Otherwise, if it's 6 months later, we don't offer the discount.
Okay.
Yeah.
That's good to know.
By the way, on that note, I got to tell you, it's amazing to me how a spouse with 6 joint accounts, meaning we share these accounts, right? 4 of them will get deleted from one person, 3 of them will get deleted from the other, and the one that got the 3 scores goes up. There's no rhyme or reason. It's interesting. I have people that have said, well, my wife doesn't work at all. Her scores are almost perfect. We have all the same accounts, and yet we have 6 different scores. It's bizarre. And it shouldn't be allowed, but it's just the way the system is.
It's broken.
Yeah.
It's definitely not a system designed for the individual. It's designed for the establishments issuing credit.
Well, and the reality is, if we truly knew the rules of the game before we played the game, that would be fair, right? What they tell you is, here's a pie chart. 35% is payment history, 30% is da-da-da. But they don't tell you, hey, by the way, this is how many points you're going to lose if you're late on this. I mean, they should, to me, the system that we're all being held accountable to live by should be published in full with no secrecy, so that we could be judged fairly based on knowledge.
Right.
Yeah. But then I'd be out of a job, so never mind. Just kidding.
So you were saying that you would like for the clients to establish 3 to 5 revolving credit lines. And so what if they were to have 8 credit cards, or, somewhere around there? Would you recommend that they just hold on to them? I mean, 0 balances, but would you recommend that they just hold on to them? Is it better to have 5 credit cards or 8?
So the question, that question's answer starts with, what is that particular client's mid FICO? If they already have a 740 and up, leave it alone. You're fine. You're good to go. If you are credit challenged, meaning 640-ish and under, you have excessive credit. And so it would be super important that that a credit expert looks at the credit report to determine which ones to close, because rarely is closing an account going to help you. Most of the time, it's going to actually take a pretty significant chunk out of your FICO score. But there are times when you have excessive credit risk, especially, well, I won't go into detail, but it's on a case-by-case basis. Generally, the rule of thumb is don't start closing accounts without coaching. Now, I also want to mention, keep in mind, installment loans and revolving credit are totally different. So a revolving line of credit is a credit card. You need 3 to 5 of those. They care about your limits. They care about your balances, okay? When we're talking installment loans like autos, student loans, things like that, you never want to pay off a car or pay off an installment loan within 6 months of buying a house, because you might have had that loan for 4 years, 5 years, and made 100% of on-time payments. As soon as you make that final payment on your car loan, you close the account, which when you close an account, that means all the positive history is now erased from your credit profile. They don't keep it open for you to have an open credit line at Chevy, right? Once you make a payment, your what you owe drops to the new amount that you owe, right? So it's always decreasing. So it always looks like a maxed out credit line. So, but on the other side of things, installment loan debt does not count against you in the FICO score. So, I mean, people will say, well, I've got $800,000 worth of student loans. That's excessive. My point being is exaggerated. But you say, you know, well, that doesn't matter at all when it comes to the score itself. It will matter to a mortgage underwriter with your DTI is calculated.
Right.
But remember, that's why we got to talk to consumers up front during the consultation and give them all the information.
All right.
Did I put everybody to sleep?
No, it's, you know, the question and answer thing is awesome because, you know, like I said, it's easy to look at a PowerPoint of, you know, what helps, what doesn't help, what to look for, what not to look for. But to get specific questions answered and get into conversation of that is more impactful. So
I like
glad that we went this direction.
Yeah, when it's an intimate group like this, it's my preferred way to go.
Yeah. So, you know, we did record this, so we'll definitely put it out there, and you can find it on my page as well on Facebook. So it'll be shareable as well. And hopefully, you know, the questions and the answers that were provided today will help you help your clients. And if there's anything that Tiffany and her team can do, they're available. You can obviously find all their information on their website, which is dcrusa.com. And they are more than willing to help you and your client, you know, live the American dream and become a homeowner. So
absolutely. Thank you.
Thank you. Hey, I want to thank all of you guys for joining us today.
Thank you, guys.
Thank you.
Absolutely.
That was awesome.
Thank you. Thank you so much. Go to Facebook. Go like us on Facebook, Dedicated Credit Repair.
Absolutely. Yes. Thank you again, Tiffany, for your time.
Usually
we
you
go
for having
about
me.
an hour. We went about an hour and 15 minutes, but I think it was well spent. So thank you for your wealth of knowledge and for taking the time out to Zoom with us today.
Thank you for having me. I appreciate it very much. Have
Absolutely.
a good day.
All right,
Thanks,
guys.
everyone.
Have a great day. We'll see you next week at 12:30.
Okay, bye. Thank you.